Hello and welcome to the Hash for Monday, July 12th. It's a new week. We got lots of stuff to talk about. We are joined today by Christine Kim. First of all, shout out to Christine Kim. How you doing, Christine?
Hi guys, I'm
She's
doing
she's
well.
she's doing well.
Christine.
What's up?
Thanks for being here. We love to see you. We got stories to talk about though, so hold on. We're gonna skip the greetings. We're gonna go straight to Adam. Adam, what do you got?
Hey, thanks for that, Zack. So Bloomberg has an interesting story out, which basically is talking about how Bitcoin is doing relative to the rest of the sector right now in markets. And spoiler alert, they don't think that it's particularly compelling compared to other opportunities that are out there. This is a really interesting story because, like, effectively what they're saying is that Bitcoin this year has been one of the worst performers, but they're doing it at a time when Bitcoin is almost identical to the price that it had at the start of the year, ignoring the fact that in the month and 2 months leading up to the start of the year, Bitcoin tripled in price. So again, if you're taking this on like a from the start of the year basis, well, then it's an argument that can be made. But if you're actually just trying to look at it in the context of like over the last, 12 months, 6 months, whatever, what has returned and what hasn't, Bitcoin is pretty darn far up there. I love these stories because they're kind of like a combination of like a Schadenfreude, right? And then very, very selective timing when it comes to sort of when traditional market makers or traditional market reporting tends to look at this stuff. Christine, I know that you spend a lot of time thinking about this. Let me throw it to you. Do you think this is a fair take or am I just crazy here?
No, I agree with you 100% there, Adam. And honestly, I think that their headline is not pointing out the most interesting about that ranking, and that is that gold, the original boomer asset, the preeminent safe haven asset. Bitcoin is a better risk-adjusted return, according to that chart, for risk-averse investors than gold. That's a big headline that Bitcoin is the better investment. So I think it's funny that they only mentioned that in like a small sentence at the bottom of the article and wasn't upfront with that in the headline.
Zach,
I
what do you
mean,
think?
Joe, I just think that Joe has been fully ETH pilled, and clearly that's what's animating this. I mean, he's just trying to troll the maxis. He's on a DeFi, he's on an Ethereum, he's on to the next thing. Okay, and this is just to rile us up over here. So, shout out to Joe for mission accomplished. I'll toss it up to Will on this one, actually.
We're talking about Joe
No, you totally
Weisenthal, by
deserve
the
it.
way.
Yeah, totally. This should not read Bloomberg. This should just read Joe Weisenthal has an opinion on Bitcoin, and he always pulls out these little charts, and they're so good. Like he's pretty fantastic at what he does. I think like if you just kind of zoom out a little bit and look at the last, not just year to date, but like a calendar year from what is it, July to July, Bitcoin's doing pretty well. So I'm not too concerned. But really great provocative piece by Joe. I think that just kind of gives you little insights into how to do financial journalism well. Good little piece by him.
Naomi, any thoughts here?
Yeah. Yeah, I'm going to jump in and just talk about the difference between getting into Bitcoin because you want amazing returns and getting into Bitcoin because you want an inflation hedge, because you think it's a hedge against economic instability, because you think it's a store of value. These don't seem to be the same thing, and yet they seem to be rolling them into one, talking about it in the articles, saying like it's done a bit better than gold treasuries as a reserve asset, but people aren't getting into those things for capital appreciation, therefore it's done really bad. It seems like he's kind of rolling those two concepts together, and it does make me wonder, what is Bitcoin? Because we do throw around this term, store of value. We think of it as this safe bet for a lot of people against what is a sure bad thing with inflation in the US and the value of the US dollar going down. But then at the same time, you've got all this rhetoric about moon and Lambos and mad gains and all this, which are kind of at odds with each other. So it makes sense that they're rolling it together in the article because the crypto space itself rolls it together. I think we're still trying to figure out, is this something that is going to retain the value of our savings, or is this something where we're going to have mad gains as more and more people rush into it? It could be both, and it could just take a while for this to settle, and because so many more people, like we're only just tapping into new markets all the time, all these people rushing into this fixed supply asset is obviously going to make the price go up, and so maybe it's just going to take a while for this market to get saturated, and then we'll see it start to level out. But it is an interesting question, like when does the level out, when does the steady part of this come into play? Adam, I'll throw it back to you.
Well, so I think that the point about Bitcoin as an inflation hedge is a really well made one. And again, like this idea of why are people choosing to buy Bitcoin comes back to this kind of core thesis around what many people who are interested in Bitcoin believe, which is that the current way that we do money is wildly unsustainable. One of the ways that we measure that is by how much inflation we actually see in the market. And I wrote an op-ed last week, which is called "Inflation is Here. It's all we always has been." That if you're interested in these topics is really, frankly, pretty interesting. So I went down a rabbit hole trying to figure out not just what does inflation mean, but more how do we measure it and how have those measurement methods changed over time? And what I effectively found is that if you go back to 1972, in 1972, a cost of living adjustment, so if you're on Social Security or a government pension or something like that, those were adjusted by Congress. So Congress had to pass a law that actually would change the amount that was being paid. In 1972, they hitched that to the official inflation metric, the Consumer Price Index, which is managed by a nonpartisan part of the government, with the idea that this would take the politics out of it. In practice, what happened was that over the next 7 years, there was a total of 94% increase in the amount of money being spent by the US government to pay these out, because the cost of living, since it was now tied to inflation, well, historically, we're told that was a period of very high inflation. And so the story goes that in sort of the early 1980s, that the Federal Reserve Chairman Paul Volcker tamed inflation by raising interest rates substantially, which solved that problem. What I actually found was that that's not what happened. Like, that was a thing that happened, but the effect that's ascribed to it is really not because of the interest rates at all. That caused a very small impact, but what caused a much larger impact was changing the way that inflation was calculated to effectively take home prices out of it. And if you continue to track inflation using the pre-1983 change metric, you see that actually inflation stayed substantially high. And there were further changes to that metric. I won't get into it here. You can read the article. In the early 90s that effectively did the same thing. So although we look back at the 1970s, 1980, 14% inflation annually, and we say, wow, that was a period of really high inflation. Well, if we were comparing inflation today, apples to apples, we're at about 12 or 13% inflation by those same metrics. So we are actually at the worst of the 1970s and into very, very close to the worst of the 1980s in terms of how inflation is actually measured. So I appreciate I've gone down a rabbit hole here, but yeah, inflation and how we measure it and what it means to our world are really, really important factors. And we've kind of lost the ability to even compare ourselves to history by nature of those changes and how we don't talk about them. But enough about that. Let's get to our next topic.
About David Pan's article on why the Chinese government has been cracking down on Bitcoin mining in the country like never before. And as it turns out, it's not because the government is worried about Bitcoin or even all that interested in Bitcoin's ESG narrative. This isn't about crypto at all. It's about China's carbon neutrality policy, which was formalized in late 2020 and over the past few months have been doing some pretty serious damage to the country's construction, manufacturing, transportation, and petrochemicals industries. So as power fueling these industries get rebalanced from coal to hydro and other renewable sources, BTC mining at the moment is being put on hold because there's these other more urgent production needs to attend to in China. So I think this is a pretty significant part of the Bitcoin mining narrative that is missing from commentary in social media and mainstream news. Initial thoughts, I wanted to throw it first to Will, because Will, you've got that mining background from Compass.
Yeah, I still need to read David's article, but I think just from what I've heard from talking with you guys and other people talking about that article so far, it does seem like that is a pretty credible thesis for why Bitcoin mining has kind of been axed in the country. I think on a high level, and we see this in the States, regulators and political officials just like, Bitcoin's a very small one. It's a small thing. It's big to us because we're in the Bitcoin industry, but to them, it's a very small market. It's very easy to just kind of flick it off their shoulder and kind of focus on things that matter more to them as like a political community. So I think it's like a tenable idea. I think there's some other reports out there that it has to do with like social consensus and cohesion there, where there's been like moments where there's been like Ponzi schemes or whatnot break out, and they didn't want that going into the 100th year anniversary of the CCP. So they wanted like some more social peace, and they saw Bitcoin mining as one kind of tenable or like tangible, like way to kind of crack down on Bitcoin itself in the country during a bull run. So yeah, there's a lot of ideas out there on why Bitcoin mining kind of got kicked out right now. I think a lot of the attention now is turning towards, can Bitcoin mining return to that country? And I know there's some firms in the country who are just turned off their machines and are waiting a little bit, and they'll turn them back on and see if they can keep producing coins. But Zach, I want to throw it down to you.
Yeah, I was just going to say, I mean, I think that, some of the reporting coming out of David Pan and Emily Parker's team on our global macro desk is doing a really good job at looking at this local context, right? I mean, we saw that video clip. It had the 100th year anniversary. That was July 1st. That's really key, right? This crackdown on crypto mining in China absolutely exists in the context of national party politics. So I think that's really interesting, and I think this piece by David is just a fantastic example, of digging in and looking at these local contexts that shape a global network. I saw Naomi had her hand up, so I want to throw to her.
Yeah, I think that it's interesting. We always talk about the non-fungibility of energy and how just because, there's excess energy somewhere, it doesn't mean that energy would necessarily be used elsewhere. And we kind of use that as a reason to back up why Bitcoin and other cryptocurrencies, their energy usage, it's not as simple as saying, well, they use X amount, therefore it's bad, because that energy might not have been used by anyone else. But what I thought was interesting about this article was talking about their plan to redirect a lot of the excess hydropower, talking about how, when you don't have the wet season, and currently it's really hot in certain areas and they're having power outages, there's a lack of energy, and so all this excess energy that was being used by hydro plants, they're just hoping to actually build out the infrastructure to redirect that to some of the areas that don't have as much energy. So I thought that was interesting. It's something that I hadn't realized before. But on the other side of things, I want to push back in some sense against the narrative that it's just about this carbon emission schedule and their targets, because it's very clear that Bitcoin is very threatening to China and to the Chinese regime. So I don't think we could say that it's one or the other. I would say that fear factor definitely has a play in how hard they're clamping down on this, especially when you compare, the amount of energy really that is being used by the mining sector compared to all of the other sectors, and yet they're coming down so hard on cryptocurrency. So I do think fear factor has a major role in all of this, and the government wanting to maintain control of the money supply.
So I think that the Venn diagram of like different centralized systems, right? You look at China, it's effectively, as far as from a governance perspective, it's a centralized system. You look at the United States, effectively a centralized system. And then within that, you have like Bitcoin and other types of cryptocurrencies with the various decentralized networks and the various decentralized participants in there. And I think what you see here is not so much about China, it's about what is the network doing. And what the network's doing is that, to the extent that there are losses around mining in China and that those folks are not able to really perform the function for the network anymore, we're seeing the system naturally rebalance. And we're seeing, frankly, for the crash that we've seen in China, we're seeing a boom in elsewhere, right? And again, it's just kind of this natural rebalancing where there's nobody in charge of where Bitcoin miners are going. There's nobody licensing people to begin operating now. It's just a self-correcting system that really can take anything that gets thrown at it. And I think that this has been one of the biggest examples of that.
Yeah, the big question.
Thank you so much. CK, I'm sorry to have cut you off. This is the control room feed. They say we need to wrap, and that's what we do sometimes on the hash. Welcome to the hash. CK, is this your first appearance on the hash, by the way? Is this the first? Your first? Woo! Well, that's the headline. That's the headline of the day.
Welcome.
All right, we're going to take a quick break. After the break, we're going to talk about a big hiring push at Fidelity Digital Assets. That's what we're going to talk about after the break. I'm Zach. We'll see you soon.
But just not for
Hey, and welcome back to the hash. Let's talk about hiring. Market down, hiring plans up at Fidelity's crypto wing. They're talking about hiring they're trying to boost their headcount by 70%, according to Tom Jessup in an interview with Bloomberg today. So this is one of those indicators that, again, veers from market activity in recent weeks, but suggests that the investment is here for the long term. And I think that is what people are reading between the lines here. I'm going to toss this to you, Will. We got Fidelity. They're talking about, we need to staff up. We're seeing more interest in Ether and other assets beyond Bitcoin, and we need to be able to capture that demand as all the institutions rush in. What's your read on this story? What does this mean?
Yeah, I think this pairs really well with the first story they started off the top of the hour with. So Bitcoin might be down year to date, like not as high as we'd like it to be, like 16% or whatever. So it's not really down. But if you look over past calendar year plus, it's up a ton. And that's why you're seeing a lot of people just invest in themselves and put more money into hiring, putting more money into the firms themselves, like the architecture behind those firms. We're seeing that across the board. A lot of firms are still raising funds. That hasn't really slowed down too much. I mean, it's not peak NFT bubble in February where like everyone was just handing out money to each other. But firms aren't slowing down. And Fidelity is like an OG in the space as far as firms come. There's even that Fidelity gang or whatever they call Fidelity Mafia, where you have like the Nick Carters of the world. They went through Fidelity years ago. They helped set up the team there, set up the crypto desks, and now they are founders in the space. And now we're going to see like more people go into these firms like Fidelity, like Galaxy Digital. And I think it's great for the space in general. Pretty bullish on that side, even if Bitcoin just like keeps trading sideways through the year. Like I'd expect more firms to keep hiring just because like 50% drawdown on a $64,000 asset, that's a lot, but still Bitcoin is much higher than it was even 9 months, 12 months ago. So that's why. Zach, your thoughts?
I'm going to toss to Naomi. Her hand's up. What are you reading between the lines here, Naomi?
So I loved in this article how they say they're also looking to offer trading for more of the week, given the 24-hour nature of the crypto markets. Traditional finance markets are open Monday to Friday, close overnight. And they're saying that, Fidelity's intention is to offer it full-time for most of the week. And it's just like, okay, well done, slow and steady. Like one day you might actually get to the place where crypto is now. And by that stage, crypto will be so far into the future. Like it just seems like traditional finance is just constantly playing this game of catch up. And it is such an archaic system. When you use crypto every day and you're using it to pay your contractors and to buy your groceries and you're just living in this instantaneous world, you get so spoiled. And suddenly you start to deal with traditional financial institutions like Fidelity or your bank. And it just is like, I have no patience anymore for that stuff. When I deal with my bank now, I'm just like, why? Why do I even have anything to do with you people anymore? Because it's just so vastly superior dealing with this instantaneous 24 hours, 7 days a week, never sleeps world of cryptocurrency. It's just a much better system to be a part of. So I just thought that was very cute that they're exploring that, and good work, Fidelity. Good luck with all of that.
Yeah, I don't know. I mean, honestly, I'm kind of curious. I always sort of had a hunch that Fidelity would be the first one to offer Bitcoin purchases through the brokerage account. And that has not come to pass. But as you mentioned, Will, they are an OG in the space and they have been looking at this space for a while. So I'm going to throw this one to Christine. I think they're in the sort of the research report circuit, some of the stuff that you deal with pretty intimately. Where would you situate like Fidelity among the ranks of the institutions that are participating in the space here in 2021?
Well, I think in terms of the crypto research space, Fidelity puts out research that's very targeted and focused on the institutional investor audience. CoinDesk as a company, we cater to a very wide audience, people who know everything about crypto to people who don't know anything at all, retail investors to professional investors, like the whole 9 yards. But from the research that I've seen coming out of Fidelity, a lot of it in the early days has been focused on why is Bitcoin important to the institutional investor? Like, why should the BlackRocks and the JP Morgans care about this asset? And I think it's really cool that one of the reasons for their massive hiring spree was that they're saying that they're seeing more interest in Ether and they want to get ahead of that demand. So I would expect a lot of research on Ether for the institutional audience coming out of Fidelity in the next couple months.
All right, last quick question before we wrap to Adam. Prediction: is this a lagging indicator of the Bitcoin bull run or a leading indicator of future institutionalization of Ether and other assets? Go.
Ooh, that's a good one. Yeah, so actually like I like to talk about like the beaconing effect that we get from when these really big price run-ups, and that is what it feels like here. Now, that said, Fidelity is a more sophisticated company than a lot of the companies we see jumping in for the very first time following those events. So I actually think you're probably right on there. And I think that this is recognition that Ethereum is an asset that is rising in the minds of traditional finance. It doesn't have a lot of the scary characteristics that Bitcoin does, and it does have a lot of financial implications for the existing system and the system that seems like it's likely to come after the one that we're currently using. So yeah, that's my read on it too.
It's got unicorns and rainbows too. We're going to kick to Naomi. Naomi, next story. What do you got?
Next story. So I'm also going to continue talking about the future of Ethereum. I have some questions for the group, but some news out of Australia. So Australian-backed blockchain company Power Ledger is apparently migrating to Solana from Ethereum. They're looking for higher speed and scalability. I thought this was interesting. So Power Ledger, if you don't know about it, it's an energy blockchain. It's built to audit and streamline the buying and selling of renewable energy. Kind of an interesting project. But yeah, they've seen that Solana is a better service for them. They're looking at, the low transaction per minute limit. And they're just saying Solana is better suited to their needs. I wanted to ask the group, I mean, we've heard of a few projects now that have been eyeing Solana and saying this is the next thing. And there have been two camps of thought. There's one saying, Ethereum 2.0, it's in the works. And when that happens, Ethereum really is just going to skyrocket. But there is a question of timing. Will they do it in time that they can still retain a lot of the projects that are built on Ethereum? Because some of them just can't afford to wait another year, another 2 years, the indefinite amount of time that this project is going to take to get going. So they are leaving. They are going to Binance Smart Chain. They are going to Tezos. They are going to Solana. They're exploring all of these competitors. So I'm not sure what is going to happen. I'm kind of hedging my bets and thinking that both could be an option, but I'm wondering if anyone from the group is swayed one way or the other. Adam, I'm going to throw it to you. Is Fidelity right? Is the future of Ethereum bright, and they're going to forge ahead, or are more companies or blockchains, I should say, like Solana, going to start capturing more and more of the market share?
I think the answer broadly is yes. So I think both of the things that you just said there are true. I think that we are going to see projects continue to sort of diversify into other protocols, and that makes sense for a lot of projects. But again, this comes back to the old Yogi Berra quote, which is that place is too crowded. Nobody ever goes there. So nobody goes there, right? I just totally butchered that. But the reality of it is that this is largely Ethereum's game to lose, right? Ethereum has done a great job of building community, and then also of just building incredible zeitgeist around the project that they are pushing on. So right now we're very much in the same situation that Bitcoin is, but for kind of the everything but money use case that Ethereum has chosen to follow. I think that even if Ethereum winds up taking a long time, in order to roll out a true, second version that is highly scalable and follows many of the characteristics of many of the projects that they're losing, that they're losing some of these projects to. I still think that it will wind up being a very strong player just by nature of how much momentum. And then again, as it rises as an institutional asset, as we were just discussing in the Fidelity story, I think that adds a whole other dimension. And I think it'll be very challenging for any other project to overtake that. It's not to say they won't gain projects, but it is to say that in aggregate, Ethereum is very likely to be the winner here.
Yeah, I think Ethereum could capture the financial markets and do just fine. That would be a huge undertaking in and of itself. And I think there's a lot of these projects that sort of launched a little bit ahead of the game, a little bit ahead of the technology stack, right? Where these sort of not super duper heavy hardcore DeFi financial stuff, but could do cool stuff that would benefit from a ledger that is public and can handle mainstream throughput. And so some of these other proof of stake chains that have emerged as Ethereum has considered its own proof of stake evolution, it would really make sense that these projects would jump to those networks that might be faster, cheaper, and better suited to the goals that they're trying to accomplish. So this won't be the last of these stories. We'll see a lot of these projects that were born on Ethereum realize that other networks may be better suited to their aims. Will, I think I saw your hand up, so take it.
Yeah, a question for Naomi. Power Ledger, can you explain what they do a little bit more? Because I don't understand why they need a blockchain or why they need a fast one either.
That is a great question, Will. And a lot of people in Australia can't understand what they do and why they need a blockchain either. It's an interesting project. They're very, I mean, there was probably like the first big Australian blockchain project. And when it came out, it was at a time when no one really understood blockchain in general. And if you add like energy sharing on top of that, how do you like use this as an efficient way to distribute excess energy? Like it's just super confusing. And I think a lot of people are still in that boat. I'm personally still in that boat. So I'm sorry, I can't be much help there. But there are also critics of it who say that they probably don't need a blockchain for this. So, but yeah, maybe we can chat about that on another show and dig into it and let people know about it. But let's change track for now. Will, I'm going to throw it back to you. Some interesting things going on in the world of justice or lack thereof.
Yeah, so still kind of sticking in the world of Ethereum. So Virgil Griffith, who is a former Ethereum developer, he's in or has been on bail release currently, and the prosecutors of that case are asking that the judge put him back in jail because they think that he is at risk of fleeing the country, particularly after he tried to gain access to a cryptocurrency wallet that he owned that had about $1 million in it. So they're saying that his risk of leaving the country is at an unacceptable level. Of course, this comes after he was arrested in November 2019 for charges that he tried to aid the North Korean government to evade U.S. sanctions by giving a presentation on cryptocurrencies at a conference in North Korea. So pretty interesting. There's a lot of ideas to pull on this. So you have like an Ethereum developer going on his own will to North Korea. He's helping or maybe not helping. He says he was just giving a talk in general. U.S. prosecutors are saying he was trying to help the North Koreans evade sanctions, which is obviously not a great play for anyone. Now they're saying like he needs to stay in jail because he could flee the U.S. and he has all this cryptocurrency that could be paid out anywhere. He could live anywhere in the world and just be like a refuge or whatnot. So lots of things going on here. Naomi, I want to hear your take on this whole story, though.
Okay. All right. So first of all, really stupid to go to North Korea and participate in a conference. He says he didn't provide any services because he was never paid for this. So, at the same time, really, really stupid, dumb move. But on the other side of it, oh my God, the U.S. criminal justice system needs a total overhaul. This is disgusting. The fact that they're targeting nonviolent people and saying you need to be behind bars, like it's so ridiculous. There are so many reasons why the U.S. criminal justice system needs an overhaul. I mean, you just look at like what they're doing to Assange, right? You just look at so many of the ways they persecute people, especially nonviolent people. You listen to Ross Ulbricht's speech at Bitcoin Miami, a little while ago, last month, I believe, and it was just so heartbreaking where he's just talking about the need for people to just push forward and fight for this to be overhauled because there are so many people behind bars in this, torturous situation. Like literally a UK judge ruled that they would not let Assange be extradited to the US because, he was at risk of suicide because the system here is so bad. You had McAfee recently commit suicide because the system here is so bad. He didn't want to be subjugated to it. So it's just such a terrible situation. And the fact that they're drilling down on this and saying you went to a conference in North Korea and spoke about, blockchain technology, therefore you deserve to be behind bars, I think is so outrageous, and we need to be rethinking how we do this whole thing. But Will, I'm going to throw it to you.
Yeah, before I give it down to Adam. So I think the clarity of what he said needs to be brought forward. It's really, no one really knows what went on that conference. For example, like I think there's some video that came out, but his case says, no, we didn't accept money for this. This was very basic information about cryptocurrencies. You could find it on Google. Didn't even need to be there necessarily. He was just interested in visiting North Korea, as a lot of Westerners are, just to kind of get an inside look of that nation state. On the other side, you have U.S. prosecutors are saying, like, North Korea is obviously a terrible state. They have prison camps. They're trying to nuke almost everybody these days. Why would you go over there and talk to them? So, I mean, on either side, I think it's hard to pull a relationship here with the Assange case or any other kind of criminal cases out there, because it doesn't, to a degree, like if they're right and their prosecutors are right, and I'm not saying they are or are not, I'm just saying you need to vet the situation fully. If they are right, then abating or helping a dictatorship like North Korea is a pretty rough place to be in. Of course, I'm not saying that's what happened.
Let's also differentiate between the state that is North Korea and the people that are North Koreans. If you have a chance to help the people of North Korea and help them get wealth out of the country and perhaps help them get means to escape this awful regime, you don't have people there who are like, I love being persecuted. It's the greatest. You know, these are brainwashed people who are either unhappy with their situation or just completely at the whim of the propaganda. So if someone's going over there and helping those people, fantastic. And so, you know, like, was it government officials? Was it a conference just for party members?
Yeah,
so
it was a government
I just
conference.
don't understand what the US. I mean, okay. Well, that's a little different, maybe, but I still think we should draw a line between the people and the government. But Adam, I'm throwing to you.
No, for sure.
We're almost done here. I got to jump in. Okay, there's two things here. One, the problem is not the prosecution. The problem is the selective, highly political, make an example out of people nature of prosecution that is so often the case in the United States today. That's the tie with Julian Assange. Nobody's saying this guy actually did anything that caused any problem. They're just saying that we need to make an example out of him because otherwise other people will do this. Otherwise, other people will humanize this place as well, irrespective of whether it deserves it or not. Secondly, think about the actual charge. They're saying that they're trying to help them avoid sanctions. Ethereum is a public blockchain, completely open source. DEXs exist with no KYC on them. So if these people are mining something and then, like mining something and then trading it on a decentralized exchange for something that's a dollar peg stablecoin, congratulations. You didn't need to be taught that. That's just out there for anybody to do it. And again, it just gets back to this whole thing. It's selective, it's political, and it's disgusting as a result.
Yeah, I agree, Adam.
Good stuff. Good show. Let's wrap it here. A lot of good ones on this one. I didn't mean to cut off the heady conversation. That was good stuff. I appreciate it. As always, we'll be back again tomorrow to do it all over again. Same time, same place. Maybe even the same people. Who knows? Tune in to find out. Christine Kim was our special guest star today. Adam B. Levine, also special. Will, thank you so much. Naomi,
not so
wonderful
special,
as always. Will, it's all right. It's good to see him. Everyone is great. We love you all,
Zack,
and we love you
really
for watching
special
the hash.
Today.
Thank you so much.
Special guest.
Thank you so much. Thank you so much. We'll be back again tomorrow, and we hope you're having a good day. Talk to you soon. Bye.
Bye-bye.